Hi guys, this is episode 3 of the Trade Like a Sniper series. This is a series of me using the TradingView Replay tool to go back to a random point of time and perform a top-down analysis in order to frame one single high probability trade idea. Okay, so you'll see firsthand of how I approach reading the market using ICT's concepts and some of my own discoveries along the way. I'm not going to do too much TA for you, but I'll basically do it in real time of how I would mark out the charts and read price. Okay. So there are minor disadvantages here compared to doing this live. For example, I can't see news events that are happening. I can't go to too low of a time frame without the replay function resetting. And the candles print instantly when I press the forward button, as you'll see. So I don't have a chance to analyze them as they form, and I also can't switch back to higher timeframes too often because it will show the entire range and therefore give me information that would affect my bias. So, okay, without further ado, what I'll do is squish the charts. This is dollar yen, by the way. Not the greatest pair because of the crazy wicks that it has. But yeah, it is what it is. And we'll see where we go. So select bar. Okay, just point at a random point of time. Let me move it around for, okay, whatever. Let's reset the chart. So now we're in the monthly time frame. Okay, so let's have a look. So we saw price come up into here, this high, break down, come up here to this inefficiency, come back into this imbalance, buy side, consolidate for the longest time, and now it seems to be moving higher, but I want to see a monthly gap like this, small one, albeit, but let's forward price a bit. Okay, so price took out this high, came into the block here. Okay, dollar yen expanding quickly. Okay, we have a nice gap here as well at that high, which is nice. Let's see if we do come down there or not. Okay, we're quite in an up move, so we may not. Oh, unfortunate. It looked like a good gap, but let's go down to a lower time frame. So we saw an expansion, price come into this gap, come down again. Belows here. Say draw on liquidity and a possible draw on price back into this possible order block. Okay, I'm looking for another gap to form. Okay, and it does not. Okay, at this point, I want to go back to the monthly and look for something better. Okay, yeah, dollar yen is in a serious uptrend. Okay. All right. Okay, let's see now. We have a sell side imbalance, buy side inefficiency, a fair value gap here. This is a buy side one, this is a sell side. So I want to see if we come back into here. We do. Let's go back to the weekly. See if we can use this as support, or do we come down here? Okay, so what do we have here? Nice weekly gap. Let's see what happens here. Okay, so If I was bearish, I'd be expecting this to move lower. In this case, being bullish on this pair, we would be expecting price to have a reaction, sometimes take out a low and then move higher. Let me see a nice close above. Okay, just a weekly. I could go down to the daily and look for higher prices. There are some nice relative equal highs here that could be taken out and be used as a target. So let's go down to the daily time frame. See a nice gap here. What one could do is say, okay, I'm expecting this weekly gap to be an inversion gap. I see a daily buy side gap get created on the daily time frame. What can I do now? I can go to the 4 hour. No nice gaps here really. I could go to the 1 hour and see a gap get traded into 30-minute. Okay, so here there is a 1 hour gap inside a daily buy side gap, 1 hour buy side gap, and a daily buy side gap in a weekly inversion fair value gap. So, depending on the type of trader you are, these are the kill zones, by the way, these blue boxes, New York, London, Asia. So we got a London somewhat consolidation, equal highs, and a New York reversal. I think we can expect some higher prices. For example, if we get in here on a market, I would put a stop loss at this low. And where can we target, right? Target a higher time frame, imbalance, inefficiency, or pools liquidity. So first target, some profits can be taken above these equal highs. We'll call that target. Target inside this order block. And target above these equal highs. And we can just say target above this swing point. All right, so we got 3 targets where we can choose to take partials and move our stop loss to break even. I don't want to go to a higher time frame now to evaluate because I might see the entire range and affect my bias. Okay, as you can see, price respected this order block here. The wicks came down, but you can see the bodies being completely bullish. So let's just see where we go. All right, so we hit 2 targets, almost hit the third. Created more relative equal highs, which I suspect will be taken. We know will be taken, right, eventually. Let's just fast forward all the way. All right, so price came all the way down one more time to this daily inefficiency and this weekly inefficiency. I'm going to fast forward a little bit. Okay, let's have a look at the weekly chart. So where was our trade? Here. Right, so we had that expansion out of the weekly inversion gap, and then we came all the way down. That was, we entered here in this weekly candle and came all the way back down in the next week, and they just expanded up from there all the way to here, and it seems like we'll be going into this imbalance here. Okay, let's have a look on the 2-week, right? Because we see some multiple candles playing in here. Most likely there's a 2-week gap or a 3-week gap. Okay, we have a 3-week gap in here. Price closes above it, trades into it, but you can see where it closes above it as well. Let's just see if there's a 3-week gap. Nope. and a monthly again. Okay, so us come into the monthly, trade it down, took out the previous month's open, take note of that, after coming into a PD array. Close here, next month open, came down again, expanded up there, closed at a high. Next month, came down to the range and expanded from there. 2 months, 3 months, nothing much. So let's have a look at the daily quickly. This entire imbalance, and you can see the candles do not close below this daily imbalance, respects it very nicely. As ICT says, the wicks do the damage, the bodies tell the story. So I have a video on that, and that's one of the most crucial aspects when reading price using ICT's concepts. Very, very important. Okay, so that's it for this video. You can see here we got a total of 5 RR. What's that over there? Where did we get in? We got in. Here, right? We didn't get stopped out. We got in here. Scared me for a sec. I was like, what? All right, yeah. So that's it for this video, and I hope that gave you a better understanding into reading price action using ICT's concepts. If you need any help, I'm always available. Just hit me up on the comments or send me a DM. Till next time, R2F signing out. Goodbye.